we worry about European growth and about the European markets. So, even more so for the Eurozone than for the UK. And our client sentiment is very negative. I have never seen it so negative vis-à-vis Europe. I don't get any questions as to how can we invest. Maybe a tactical trade on the gills. But European markets are out of favor. And I think that is to a large extent because indeed that overhang of the tariffs. And then how is Europe going to react without talking with one voice? And then, more broadly as well, that industrial policy that is really absent. You saw the Draghi report last year, which is arguing for that Europe needs a real strong industrial policy. And it's really the only economic bloc that doesn't have it. And so therefore that obviously immediately translates into German manufacturing, for example, doing even worse than global manufacturing and global trade. So it's a real issue. So even in spite of those markets being cheap, we have an underweight on the Eurozone.
And if the euro goes to 1 versus the dollar?
We think it's going to below 1, actually.
But
indeed,
what's your target? What's your target?
99 cents.
99
just to have
cents.
that,
Oh, okay.
just to have that headline that it goes below 1. Yes, of course, that creates some benefit in terms of earnings and competitiveness, translation gains, and so on. The other positive.
How much at the margin? At the end of the day, those earnings, the value accretion coming in from a lower euro would already be in the price. It's not like those companies are not benefiting because of a weaker euro today.
And it will not be a surprise. The only positive I would say is that it tends to, even if you then stabilize at 99, it then tends to accrue in terms of earnings over the next 12 months.
Fair point.
So the benefit actually, continues. But we get lots of questions about allocation into the US. Clearly, that is a market that people can get excited about. The only thing is obviously the valuation differential, but I think that's almost completely explained by the difference in sector composition and the difference in ROE. If you take those two into account, you only have a 2 or 3 points on the PE differential that is a liquidity premium really for the US. Really? And I'm willing to pay that liquidity premium because the US is such a much deeper market and obviously also looks at much more productivity growth in the future.